The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining us. Right now, we've got the Dow trading down 97 points, the S&P off 8, composite down 13, small caps off 4. Over across the pond in Europe right now, we've got the DAX trading down 133 points. That's up 1.7%. The FTSE also giving it up 1.2% out there, trading down $76 and change. The King up 27 cents right now, trading out at 79.41. Gold off $3 out at 16.67. Silver off 28 cents. That's 0.8%, trading out at 31.65. Light sweet crude off $1.35, down 1.3% out there. Our calling number is always 877-927-6648. Hope you had a fantastic weekend out there. For those of you that took in the Super Bowl, hopefully you had it was a good, safe, and fun Super Bowl. I hope your team won out there. And as we take a look at these markets, let's go take a look at who's winning today's session between the Bulls and the Bears. The Bears here have the lead. Of course, we're only in the first quarter here. First quarter's not over. First quarter will be over when we go to Basil Chapman, when he's up next. Then we'll go to the first quarter. So Basil and Larry Pesavento will take us into halftime. And then we go to Daryl Martin and David White. That'll take us into the third quarter. And then into we'll get the combination of Daryl Martin, David White, and Ken Shreve. One of those would be Beyonce. They'll take us into the third quarter. And then the Tom O'Brien Show, obviously, he'll take us into the fourth and final quarter out there. We take a look at the Dow right now. The Dow trading out at 13,913, giving back 97 of the 146 points that it was able to accomplish on Friday out there. If we take a look at patterns that are out here, you've got that 1 point, even with the Friday's move out here. We'll go ahead and it looks like the butterflies are out of the cocoons. And so you've got a 1.272 butterfly sell pattern that completed on Friday out there. And, of course, we're taking a look at ranges here on my chart. So we had it completing really the session here on the January 29th. That was at the high of 13,969. Got to a little bit slighter high out there. But within that range, within that 1.272 butterfly range, now we're waiting for a reversal signal. Today's candle already a little dark cloud cover, but the bigger candle reversal would be a close below Friday's open, below 13,860 out there. And with that type of strength of candle from Friday, if it does that, just simply a huge reversal signal coming into a reversal pattern already, and also being inside the overbought area out there. You can go back very far in the charts and try to find what I call a type 1 strength. That is a numero uno strength out there when I'm saying type 1 strength. And you will be very hard-pressed to find where the market reverses entirely that very next day. So we'll see how this session, but the number you want to have on a pad of paper is a close below the open of Friday. That number, 13,860, that would not be a good sign for the bulls out there. If we go take a look at the S&P 500, the S&P 500 right now trading out at 1504. That, too, completing a 1.272 butterfly pattern. So as we go take a look at that, that's simply coming off of your September 14th high down to that November 16th low. As we go ahead and we draw it in there, you can see 1.272. So you got the butterfly pattern out there. You got the a little bit more than a 1 to 1A to be equals CD as well. And as we take a look at the number you're paying attention to on the S&P as a close below Friday's open, that would be 1498. Does it have to get below 1498 to give you a bearish reversal signal? No, it doesn't. But that's just giving you the bearish engulf into the one where if that takes place, let me tell you, it's sending out a huge, at least it is to me, a huge signal that the market is going to begin its retracement. Where is it going to retrace to? Well, it could retrace simply just a sweet 618 of that entire move. So if we come off on November 16th all the way up into the swing point of Friday, 0.618 would take you right back down to the December 31st area, into that 1408-ish. Could take you all the way down to the bottom, which would be 1398 out there on a reversal. Why Why is Suite 618 a possible area of retracement? Well, just take a look at the market behavior. We'll go ahead and delete this off of the screen here. And if we take a look at coming off of the lows here from June the 4th all the way up to the highs on September the 14th, you'll see the market came all the way down. In November, it came right down to where? Suite 618. That price point was $13.46 and change. That's exactly what the market did last time. That was also a butterfly pattern. If we draw that butterfly pattern, here's what this one looked like coming off of his. Let me make sure I got the right swing point out here. Yeah, that was it. So we come in off of the April 2nd swing point high down to that June 4th level. What you're going to see right here, you're going to see a 1.272 butterfly. It moved just a tad beyond that, but basically you're looking at a 1.272 butterfly out there, followed up by what? A 0.618 retracement. So if we go back and we take a look at coming off of the highs December 19th, what kind of retracement off of December 19th to the highs out there? You're going to see 0.618. Be the same thing whether we came off of that or we came off of the November 25th lows out there. So you've got a 0.618 retracement. So if you get a reversal signal, and you've done, and before in the past you did a 1.272 butterfly, and your retracements have been down to the 0.618 level, and we can go on intraday charts and we can see 618 areas being hit all the time, would kind of make you say, something to think about. So those are the patterns that are set up out there. And you can take a look here as the highs are made in September 14th. You did get a reversal signal. Here wasn't a bearish engulfing. That would have been the day of September 17th out there. There's a way to connect the dots out here, kind of like Etch-a-Sketch. There's a way to be able to put that together. That's what I like to be able to teach folks how to do. And there's a online workshop, a one-day online workshop that really teaches you all that you need to know, everything that you need to know, compressing decades into days about candlestick charting. And that is the first place that anybody should start with regard to learning the message of the markets out there. If you click on the homepage at TFNN.com on the Trader's Edge tab, it'll take you to one of my pages, and you'll see down in the lower portion of the section that specific workshop dealing with candlesticks out here. You've got also the market being where? Being in the overbought condition with patterns completing. Now you're just waiting for some signals here from the markets, waiting for candlestick signals. So we've done the Dow. We have done the S&P 500. Let's go take a look at the New York Stock Exchange. Let's go take a look at the NYA out here. Let's go ahead now on the New York Stock Exchange. What we know that it was doing from a time standpoint was really making a really nice butterfly pattern as well. This is a weekly butterfly pattern, 1.618 butterfly. Let's go take a look at the daily chart, though. Take a look at candlesticks out here. Oh, how about this? I did not see this. So let's pay attention to this one. Let's see. The low of Friday's session is 89.1997. 89. Oh, how about that, folks? Do you see what we have out here? Why did it take Stevie's son so long to see this? I did not see this. Do you see what I'm looking at, folks? Let's take a look at it. Let's go through this one step at a time here. Let's take a look at the Thursday high. The Thursday high out here is 89.1066. 89.1066. The low of Friday, 89.1997. There's a gap there. We got a gap. 89.1997 compared to the high of today, 89.10. What do we have? We have another gap out there. So what does that make this three candlestick pattern out here? What is that? An island top reversal in the New York Stock Exchange. You know, I thought that the bearish candlesticks that I was showing you, whether it was on the daily chart, so you can, or the futures charts, was giving you the signals. Here, I'll give you the big one. The big one is if the New York Stock Exchange does not rally today and get up to 89.1997, you've just gotten the biggest reversal signal that you could possibly be asking for. Out there. Because the New York Stock Exchange is what? It's the breadth of the marketplace. It is the better index to be taking a look at versus the S&P 500, or certainly the NDX 100, or even worse yet, how about the Dow 30? 30 stocks going to control the world? No. But how about the New York Stock Exchange? the New York Stock Exchange, you're looking at about actively traded stocks around 2,300 or so, stocks that are trading out there, giving you an island top reversal after we just took a look at that 1.618 butterfly out there. As in fact, I think we've got I know there was a 3 drive to a top pattern out here, but let's just take a look at the butterfly pattern on the daily chart, just simply coming off of the September 14th high down to the low on November 16th, all the way out there. A little bit of 1.618. It says 1.67. Is that close enough, folks? You talk about reversal signals. Paul Revere riding down the streets with the horn out here. Okay, folks, you absolutely have it. You've got it. Okay, so if you're asking, should you put on a short position? Here's the answer. Absolutely. You put on a short position. You have an island reversal, and what you do is you close it out if you get a close back above the high of February 1st out there. It's really simple. You're getting a huge reversal signal inside the New York Stock Exchange. I think I've got to go back quite a ways to find a island reversal top. But why don't we go find an island reversal bottom in the New York Stock Exchange? Well, I think we found one. We take a look at the session high from July 23rd out there. You're looking at the high of 76.84. We take a look at the low of 76.91 from July 26th. This set of 3 candles right here, this created a little island bottom reversal configuration out here in the New York Stock Exchange. You can see that was most certainly an important low out here in the NYSE. You've also got this island reversal. She had 2 island bottom reversal signals out here. You had one coming all the way back in June of 2012. So, as a treasure hunter out there, this is about as big of a treasure as you can find at the highs. When you've got patterns that have completed, when you're in overbought condition out here, folks, this is okay. It's a big reversal signal. It's not a small reversal signal. It's a absolutely huge reversal signal. So this gives you the plethora of trades to be taking a look at. You've got a trade out here. You could probably take a look at. Let's go peeking on bonds. See what bonds are doing out here. Bonds, moving lower on Friday. Today, right now, forming a bullish engulfing candle. We know bonds are going to have some resistance as they get back to the January 2nd high out here. But I can tell you, if you're a newsletter subscriber, well, if you're not a newsletter subscriber of mine and you haven't tested it out, you really have to say why. What's the cost? The cost is putting down a $149 deposit to get incredible information for at least 30 days out there. Go check it out, because there's some clues with regard to some trades that we're in, trades that we got into this morning out here. That is it's an analysis that's totally separate from the charts. It's what I'll call following the big money out there and understanding what those big ships are doing. Well, I can tell you the big ships inside the New York Stock Exchange, I didn't think they could turn on a dime like that, but they did, giving you the largest reversal signal that you can possibly get coming into a completed set of patterns out here. Bonds look to me like they are on their move to the upside here, and I can tell you that is what the big money out there, the big money guys, are saying bonds are moving higher. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. Dow off 105, S&P down about 10 right now. And, you know, we were digging for some gold and silver earlier as we were taking a look for reversal signals in the index charts, and we hit a gold mine. We took a look at island reversal top formation in the New York Stock Exchange. We also hit a silver mine. We're going to go out to Longmont, Colorado, to one of our Great Panther Silver giveaway winners from last week. That is Doug. Doug, congratulations.
Well, thank you very much, Steve.
Hey, our pleasure. Thanks so much for playing along with us. We are happy to get that Great Panther silver coin out to you.
It's a real privilege to be able to be part of this TFNN group, and I love every minute of it.
Oh, that's great. How long have you been a listener? How'd you find us?
I've been listening for maybe 3 to 4 years.
Oh, that's really great. Well, we appreciate that very much, and we love our tigers and tigresses. And last week was a lot of fun, giving away all that silver. So that's a wonderful thing. Are you a native of Colorado?
No, sir, but I've been out here for about 20, 25 years.
Oh, that's great.
Originally from the Midwest.
Okay, all right. Well, that's good. Well, I'm from the Midwest as well. And anything you'd like us to take a look at for you while you're on the line?
Well, I was just curious. I sort of follow the ETFs. I have to play that because I'm in a 401.
Okay.
And I noticed that some of the European ETFs, like the EWG, EWQ, and EWU, also have island reversals.
Okay.
And I was wondering whether the EPV could be be a possible trade?
EPV. So let's go take a look at the EPV. V as in Victor?
Yes, sir.
All right. So if we take a look at EPV, and let me punch that up here. That is the, what is the EPV? I'll find it here in just 1 second. EPV is the ProShare, UltraShare. Oh, that's great. Didn't tell me what it was for. Which
It's supposed to be a short on the European market.
Just the European market in general. Okay.
Yeah.
So now the thing is, what you've got to do, Doug, is it's important to understand the underlying instrument. So I don't know what's really, when you say the European market, you've got to get probably the top 10 or 15 holdings inside this, just to get an idea. The gaps within here, because you're dealing with currency conversions as well, don't have as much meaning. They don't have really any meaning on the charts here. So any of those other ETFs that you were talking about, the foreign markets, just don't. They're still good to trade, good vehicles for trading, but don't be using gaps. Are really wonderful tools out there, but don't use gaps as a part of your information. And what I would do is I would be trading something where you've got perhaps more liquidity than something like this. On Friday, this did 98,000 shares, 75,000 shares the day before that, 100,000 shares. So there's not a lot of liquidity, inside this ETF. So you just need to understand that going into it. So I wouldn't be paying necessarily attention, but the U.S. markets here have given you a real good signal. Are you adverse to trading the ETFs in the U.S. markets?
Oh, not at all.
Okay.
I just noticed that the EWG had a island reversal too, I thought.
EWG, and which market does the EWG?
That's the German.
That's the German market. Yeah. Okay. The German market. So the DAX. So I would trade the EWG just simply off of the DAX chart. And so the DAX chart right now is giving you a real nice bearish. It actually started giving you bearish candlesticks on January 30th. And those highs were not taken out. So if you were going to trade the EWG, you would look at closing that out if the DAX ever closed above the high of January 28th out there, because that would be taking out a natural area of resistance. What the DAX is doing, giving you reversal signals, has done that over the past couple of trading sessions. The real reversal is going to be this little support area. So the gap on the DAX does mean something. And that gap that I would be paying attention to, Doug, is going to be the gap up off of December 28th out there. I don't think on December 31st it was actually closed. So the top of that gap is 76.65.68. And each time that has been tested, are you watching on Tiger TV by any chance?
Yes, sir.
Okay. That red horizontal line going across the screen, that gap, and this is where gaps are really so helpful. And you don't want to be afraid of gaps. That area there is a very strong area of support, because it's been tested really 4 times. That was tested on the January 15th level, got down below it, closed back above it, says it was support. Very next trading session on the 16th, gets below it, closes above it, says it's support. Trades again on the following session on the 17th, just tags it, closes back above it. Does the same thing on January 22nd as well. So that's the area where it's headed to. If you see this break, that level of support, close below 76.65, that would say that EWG would be a good trade for you.
Okay.
All righty?
Thank you very much, Steve.
You bet. And thanks so much for winning and listening, and congratulations on winning the Great Panther Silver Giveaway. We get back, we're going out to British Columbia to talk to Rick. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow off 114, S&P's down 10, and I was able to find an island reversal top in the New York Stock Exchange. That top was put in here. You'd be looking at, there was a multi-day event. It was the March 16th high as well as the March 19th high out there. If we take a look at March 15th, you get a close right at the top of the closing session, very close to it. Yeah, no, in fact, right on it, 82.46.72. So March 14th, you get a close at 82.46.72. Gaps up the next trading session, stays up at that level on March 19th. Gaps down on March the 20th. Set up a island reversal at March 16th level. That island reversal is what took the market down into the lows in June 4th. If you take a look up there, it wasn't even really in the extreme overbought territory, but it does show a pattern that I'm going to be showing folks at a 60-minute, 1-hour workshop that we're putting together. I think all the details will be on the homepage of TFNN.com by the end of the trading session. But what you did have today, or at least at this stage here, is you got an island reversal top in the New York Stock Exchange. Let's go out to British Columbia to our man Rick. Rick, thanks for calling. Thanks for holding. How are you today?
Hey, good. How are you?
Good. Did you watch the Super Bowl?
Yeah, but it was a different football version of the NFL because they throw holding out the window.
Yes.
There's no more holding penalties in the playoffs, hardly.
Yes. Yeah, good point. Good point.
And even though I was a Baltimore fan, that final throw by San Fran looked like there could have been a little bit of interference.
Yeah.
You know what I mean?
No, I do.
But early in the game, there was a Baltimore receiver that was held up because the announcers throw like he didn't get to the ball, but they said, "Well, look, he was interfered with."
He was.
You know what? It wasn't like the refs went against either team. I just noticed that there wasn't a lot of penalties. That's all.
Hey, they let them play. That sometimes that's a good thing. Sometimes that's a good thing. So at least it turned out to be a game. Went down to the last play, most certainly. So at least that part of it. I thought the electricity going off was interesting as well. Of course, as soon as that electricity went off, so did my electricity. That was it for me. But the good thing is I woke up with 2 minutes to go in the game, so I was able to actually watch, the end.
And my mom always used to say to my dad was quite an entrepreneur, and she would, when he was really quite proud about something, not being cocky, just proud, she'd always say, and the pride cometh just before the fall. And and I think that's what happened with the power outage. I think Baltimore was feeling pretty proud. The game was over. And San Fran just come out and,
In 4 minutes they had scored 2 or 3 touchdowns, right? So.
Well, you figure out, they felt, for a half hour you feel humiliated, you feel no good and everything, and they just came out gangbusters, and Baltimore, it's just, that's life, right?
Oh, it is.
But what I don't like about the NYA is I don't get volumes.
Yeah. Okay. Well, and that's absolutely no. You can get volumes. You can get some volume there. But just the candle signals. The candle signal alone, or reversal. The island reversals are just simply great at bottoms or tops out there, and especially when you're extended conditions. So I think the trade is really simple.
You know what? It's funny you talked about the NYA because one of your callers, and I don't know if it was on your show, phoned in about Berkshire Hathaway.
Okay.
And, you could argue there's an inverted head and shoulder, but like I think Bud used to say, if you look hard enough, there's inverted head and shoulders all over the place.
Yes.
And they don't always work. But the NYA has it.
Well, I showed you, I don't know if you caught Friday's show, but I put together the head and shoulder pattern in the U.S. dollar index because there were a number of patterns that we're completing down there on as we came into Friday's session. And so that has a real nice head and shoulder pattern out there because it measures, the shoulders measure in time and everything.
Exactly. Now, so you mentioned NYA. Now,
yes.
Berkshire Hathaway kind of parallels it because, they own a little bit of everything.
Yes.
So anyway, that's
it's a strong looking equity out here. We're looking at the B shares, folks.
Yeah,
so
BRK.B.
Yeah, so we got the B shares out here, and certainly it too, as just like everything else, very much stretched and overbought.
And look at that inverted head and shoulder.
Yep.
Look at how we broke the area. Look at the real price, like Tom likes to say, around 17 million.
Yes.
Shares in September.
Right. Yes, absolutely.
And then the next 2 real prices in the last 6 months are in that area.
Yes.
And we basically went up with, you could say no volume. And you put it on a weekly.
Yeah.
And, it didn't do an island.
No, it didn't. But it's starting to have a reversal, and you could get it this week with a close into the middle, probably about the 95-ish range. It's at 96.85. That would give you a weekly reversal signal out there for sure, and volume on the weekly. My goodness, that takes you all the way back into February of 2010. But on the daily, you were pointing out the volume. And so the volume on the bar, for example, of December 21st, I don't like that. To me, that's not any kind of breakout. You had volume, but you didn't have wide price spread. So I wouldn't feel real good that. Now, it's nice that it happens to be around the area where you had 17 million shares. So it just adds to the $89 level as a support area. But, Berkshire Hathaway, it's got some decent, not a bad looking stock chart.
No, it's not.
It's had one heck of a nice run out there. Of course, it had a nice island bottom reversal on the daily back in September of 2011.
Well, the only problem with this stock is they keep changing what they own.
Yeah.
So if they really know what they're doing, you can't really follow this thing relative to the S&P because they could be buying utilities that go up on a down market or something like that.
Yeah.
You know what I mean?
I do, absolutely.
But still, this thing looks like it should pull back, you know. And
yeah, no, I think you've got it pegged, and I think it does come back and it tests, you know, in that $89-ish area. And what it also has really at the 91.29, it's got that January 2nd gap up. And I suspect, you know, on a pullback here, I don't think the market is, you know, I think all we're going to do is going to work off the overbought condition and at least start pulling back to the 0.618 level. Of course, volume will be pretty critical. If there's some real volume that starts coming out of this thing, that could set up more than that type of just normal pullback out here. But, you know, an equity like this would be good to be watching as the market pulls back and then it starts to reverse. How far of a retracement does this actually make?
Yeah, exactly. Well, thank you very much.
Hey, you bet, and thanks for calling, and always good to hear your voice.
Bye.
All righty. So, folks, let's go take a look at, we started to take a look at some of the indexes out here. We haven't done it all is take a look at any commodities, so let's do that. And then let's go inside the spiders. Let's go inside the S&P 500 and take a look at a couple of the sectors in here. So, we'll just start off with the U.S. dollar index. This we were talking about head and shoulder patterns out here. The head on the U.S. dollar index really formed on November 16th. That is this area right here. The left shoulder is right in here. I was mentioning, if you heard me when we were talking with Rick, if we take a look at just simply looking at time to form between the head and the shoulder, you're looking at really good time balance out here between a left shoulder and a right shoulder out there. And the neckline was what was tested as well. That would really be coming off of this swing point low back here on September 14th. And what happened on Friday's trading session was you had the test of the hammer candle, and hammer candle came in on December the 19th out there. You had this area of tested support, which was created by the bullish engulfing on October 18th. So that's the red line going across the screen, and you've got the neckline that was being tested. And the importance of why I was showing it was because if the market was going to crack those areas, it was going to say the euro was off to the moon, Alice, and U.S. dollar index was going to pull back substantially. And so there's a nice chart because it has multiple chart patterns that are really coming together at the same time. And now we're clearly seeing a reversal here in the U.S. dollar index. But if we go take a look at gold, if we take a look at gold here, gold now testing the hammer support. That happens to be the January 4th level. If you do get a close into the 1664 level, and that so far that price has been rejected. If gold does come down there, you know what we'll do, it will test first the January 28th swing point. If it can get below that close, which is 1651, it'll just simply come back and test the bottom of the hammer out here. If that hammer fails, and this is why it's really important, because when you close below a hammer, if you're long, you're wrong. I mean, that is just simply the rules that you want to. If there's a rule that you want to have in your trading arsenal, it's understanding how to identify hammer candles, and it's important because I watch folks do it incorrectly all the time. And therefore, you know, in a hammer candle, the market has to be moving down into it in a certain shape that it has to have. And so it's very important because it is really telling you where the bulls are hanging out and where there should be support. And when there's no support there, when I say you're long, you're wrong, it also means you've got to go back and figure out where that next support level is. Well, that next support level inside gold is going to be down at about the 1584 level, but the real support comes all the way back down to the lows in the 1526. So I suspect that, well, I don't suspect. If you do get a close below that hammer candle, from January the 4th out there at 1626, you can pretty much write 1526 on your pad of paper and start taking a look and maybe taking a long position in gold there. If we take a look at silver out here, you know, Friday was really just kind of an inside day. The same thing we have going on here. Silver, though, stronger than gold. That same candle, which is January 4th, you can see silver quite a ways away. The top of that is 30.30. You've got silver trading at 31.68 right now. So silver actually is stronger than gold out there. If we take a look at light sweet crude right now trying to tackle the 9-period exponential moving average. You've got bearish candle signals out here. If we take a look at the retracement, what the light sweet crude has done is traded into the swing point of September 14th out there. It hasn't closed inside it, but it's traded up to that level. You get a close below the 9-period EMA. That happens to be 96.73. It's at 96.70 right now. That would be the first time, as it did the Johnny Cash. I'm going to walk the line, walk the 9-period EMA. First time that would close below it since December the 13th out there. That would suggest that you'd pull back and pull back in light sweet crude. That would take you from the lows of November 17th all the way up to the highs. 0.382 is the $92 area. I would say 89.47. The 200 exponential moving average looks like about 92.03. So 89 and 92 would likely be the next move on light sweet crude. If we take a look at natural gas here, natural gas just building some cause for its next move down here, just simply trading sideways. So it looks like to me that what natural gas is doing is setting up a larger A to B equals CD down pattern. If we take a look at bonds, bonds moving up this morning. Bonds are going to move up to the top of the range. That top of the range is going to be the gap down from January 2nd. So that is where bonds are headed to. That level is 146.1. And we'll see what kind of strength they get. I suspect that they're going to not just go up to that level. They are going to try to actually take that level out. If we go now into the ETFs, not the ETFs, the spiders, let's go into the sectors of the S&P 500, and let's see what we have. So let's start with the strength out here, which will be financials. Let's see what the financials are telling us. Financials today here down with a volume of about 13 million shares. That's after making a high of with 57 million shares. Nice candle formation, nice gap up on the trading session of Friday. Again, what it's coming down to is that gap hasn't tested it yet, and that would be the level of 1741. 35 million shares, though, on that trading session, and today has already done 13 million shares in only an hour and 15 minutes. So it's coming in, and that's actually a swing point, which is January 31st out here. So it's coming into that swing point with a little bit too much volume. Where could financials pull back to? And look, I suggested, I didn't say back up the trucks, but I did say you've got a huge reversal signal in the New York Stock Exchange. Not easy to do, get an island top reversal signal out there. And it makes trading easy. Doesn't mean the trade's going to work out. You want to make sure that you're using the proper money management. The easiest way to use proper money management is just simply don't risk more than 1% of your capital. And what I mean by that, whatever the capital is that you're trading, let's just say it's $10,000. 1% is $100. $100 is all you need to risk on any one trade. You take that $100, you divide it by your stop, and do not make your stops tight. This is a volatile marketplace. Your stops need to be wide, not tight. On a market that's nice and grooving and moving, you can have tighter stops out there. But if your stop happens to be $2, take 100, divide it by your $2 stop, and it's 50 shares. That is your position size. That's what you would buy. Do not overtrade. It is easy. It's just a simple math formula. And what you would do is, from a stop standpoint, is you would want to, on the New York Stock, you see it close above the high of Friday on the New York Stock Exchange, island reversal schmerzel. But it's an easy trade right now with backs being up against the wall. If you take a look at the XLF, this is too strong to go ahead and short. Doesn't make sense to short the financials. Instead, what you want to be doing is you want to be sitting back waiting to actually buy the financials when we would see assuming that there's going to be a reversal, assuming there's going to be a pullback. You want to be you want to have the XLF or the FAS on your list of things that you want to buy because of the strength that we are seeing here in the financials. But this is not where I would recommend going short. If we go take a look at the energy sector out here, the XLE, that is, that might be the second, third weighting structure inside it. Energy sector here, not giving you a reversal signal. Gapping, when I say gapping lower, compared to the open of Friday, but not a true gap in the sense of daily candles out here. XLE not giving you necessarily a reversal signal just yet. 877-927-6648. Dow's off 109. S&P's off 11. We'll be right back.
Are
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow off 111 right now. S&P's off 11. The composite off 18. The small caps off 7. And we were talking earlier, the last segment with Rick in British Columbia. We were talking about the Oracle of Omaha. And we're going to switch all the way over to Oracle itself. ORCL is the ticker symbol for Angie in the den. Folks, if you haven't had a chance to try the Tiger's Den, go over to the homepage at tfnn.com. You can absolutely test drive it for 30 days out there. You want to do it, just simply a great group of people inside the Tigers Den. Good trading ideas out here. As we take a look at Oracle, we're looking at the weekly chart. Angie was pointing out that it looks like it's making a double top pattern, and most certainly it is. We coming on the weekly chart, we'd be looking at the swing point here from May 6, 2011. The swing point low there, 34.57. The high is 36.50. Hasn't made it all the way up to the high. The volume out there, was 141 million shares. Boy, it was coming into that level with 196 million on December 21st out there and just kind of petered out. So it's inside that swing point with lighter volume, and it hasn't tested the actual high. Has not tested the 36.50 mark. So it's trading with inside that swing point. If you're watching us on Tiger TV, those are the two black horizontal lines going across our screen out here. This certainly gave you a nice reversal signal back in May of 2011, May 20th, the week of May 20th, 2011. That's where it gave you the reversal signal. It closed that week out at 34.27, and then it proceeded to move all the way down into August of 2011, down at the 24.72. So it also, has a double, triple bottom-ish test out here where you had a nice gap up going back to September of 2010. I would say on the weekly chart right now, until you get a close, I would say until you close outside of the range of that May 6th candle, it's not really a shortable, I don't know if that's what Angie was looking at here. Obviously, this week, right now, we're just off to the first start of the week, so not enough information to reveal anything. You do have price on the weekly basis being up in the overbought territory. You can see the signature on this stock. Each time it gets up into that level, it backs off. It did it most recently here back in September of 2012, and it most certainly did when it was making those highs back in the week of April of 2011. So we know the signature pattern on the weekly chart out here. If we take a look at the daily chart right now, you've got Oracle trading down into the Thursday session where it had gapped up on Friday. That had 19 million shares, made a high with 27 million shares, so far backing off with only 5 million shares with an hour and a half in trading. So volume-wise, the math out there says could be backing up with some decent volume, but that first hour of trading, first half-hour trading, is obviously heavily weighted, just as the last 15 minutes of trading is weighted out here. But no real reversal signal on the daily chart just yet. And that was on Oracle. So I hope that helps Angie out in the den. Let me help each of you out here. Here's what you want to be paying attention to. We got a major reversal signal in the New York Stock Exchange, the wider breadth of the market, an island top reversal. That, folks, says back up the trucks, but use money management. Use money management. If you ever were interested in shorting something, then now is absolutely the time to go ahead and take a short. If we go take a look at the other indexes out here, so the New York Stock Exchange has already given a foghorn or a bigger horn out there that, to be paying attention. You get right now, you've already got a bearish candle. An even more bearish candle would be a bearish engulfing candle in the Dow. It closed back below Friday's open, so it closed below 13,860 out there after completing 1.272 butterfly. You got the same thing going on in the S&P 500. So the S&P 500 also giving that same signal, and in the NDX, which was the strongest on Friday. Looks like it's trying to get back inside its range. Back inside its range means it closed below 27.4650. You get that across the board, you're getting reversal signals. Stay tuned for Basil Chapman, then Larry Pesavento, Darryl Martin, David White, Ken Shreve, and the Tom O'Brien Show. Have a great Monday, folks.